Welcome everybody to the accounting live stream. My name is Matt. I'm really excited to chat with all of you and answer all the questions that you have about accounting with your church and about ChurchTrac accounting. That's what we're going to be covering today. We'll cover some foundational aspects of accounting for churches, but also talk about ChurchTrac accounting and some new features that we've created to help make the process simpler and easier for you. Before I go any further though, I would like to go around the table and we all introduce ourselves because I'm not an expert. Normally these live streams, it's just me and maybe one other person. You've probably seen Wes, the two of us doing this together, but I'm not an expert. So I brought a few other people here at ChurchTrac that have a lot more experience than I do in church accounting and in just assisting and helping churches. So why don't we go around the table and introduce ourselves?
Hi, I am Byron. I am the CEO and founder of ChurchTrac.
I'm Lori. I'm the support manager.
And my name's Rebecca.
All right, thank you everybody. Well, what we're going to do is we're going to dive into some foundational things about how to set up accounting for your church and cover some new features that we've created. But before we get into all of that, I just want to share a few resources with you that are going to be really helpful for you in your church accounting journey. The first is our YouTube channel, which you're on the YouTube channel right now. So go ahead and like this video and subscribe to the channel so that you can stay up to date on all things that we're doing in the future. Also, we have a Facebook group that we would love for you to join, filled with other leaders that use ChurchTrac. So go ahead and join if you're on the platform and be a part of a community of other church leaders that can answer your questions about ChurchTrac or anything else ministry related. And then we also have a support team. In fact, Lori is the manager of our entire support team. So go ahead in your ChurchTrac account, click that orange help button in the top right-hand corner of the screen, and send us a support ticket. You can click the Show All Help Topics button or the Ask Us a Question button. That sends a ticket directly to the support team so that you can get the answers to the questions that you have. But now that we've got all that housekeeping done, let's go ahead and dive into the ChurchTrac account. But before we do that though, there's one other thing I want to mention here, and that is if you ever have any questions, I kind of breezed over this just because it wasn't up on the screen, but we also have a user guide that you can access with articles that cover everything in your ChurchTrac account, videos that cover most of those topics as well. So go ahead and check that out if you ever have any questions and need assistance with your account. But now that we've covered everything, we'll go ahead and dive in. So, Byron, why don't you take us through some foundational aspects of setting up your ChurchTrac account and doing church accounting? I guess we actually have a little bit of a mic situation, so we're going to give it just another second. But what Byron's about to do though, is we're going to talk through some very foundational, like how to set up your accounting and have a foundation laid so that the process of your accounting is going to be very smooth going forward. So take it away.
Hopefully you can hear me.
Hopefully we can hear you.
So if you are new to accounting or if you're new to ChurchTrac, it's important to understand how accounting works in our platform. We use a simple, single entry, fund-based approach that's built around three core concepts, and those are bank accounts, funds, and categories. This approach is ideal for most churches because churches don't need the business style double entry complexity.
Right.
They need clarity and simplicity and purpose-based tracking. Once these three core concepts click, then everything else falls into place and it all just makes sense. To help you see how these three concepts work together, we created a visual guide to make it easier to understand. So let's show that to everyone now. As we reference links and resources today too, you're going to be able to see these links to these resources in the description section underneath this video. So we've got several things there that we're going to mention today. Here on the chart though, you can see all three things and how they work together, these three concepts. What we want to do today is take a moment to define each of these three concepts because understanding them is key to getting the most out of the new features that we're also introducing and talking about today. Mm-hmm. The first core concept that we want to discuss is bank accounts. Bank accounts track money you actually have or money that you owe. Money that you have is called an asset.
Right.
Money that you owe is called a liability. When you create a new bank account in ChurchTrac, you specify whether that is an asset or a liability account. Rebecca, can you give us some examples of asset type accounts?
Yes.
And you get to cheat a little bit because it's right there on the screen for you.
So that would be your checking account, savings account, money market, and one that is not named your CD accounts.
Ooh, your CD.
Very good. Lori, why don't you tell us a few examples of liability type accounts?
Oh, as I say, do I not get the cheat? So that would be your credit card accounts, your mortgages, and loans, and long-term loans specifically.
Right. In ChurchTrac, bank accounts are typically accounts held with a financial institution, and that institution sends you a monthly statement about your account. Each month you go into your account in ChurchTrac and you reconcile that account to your statement to ensure nothing's missing. And so that's what bank accounts are. I think everyone understands this is a bank account.
Yes, so far so good.
Right. The next core concept that we want to cover is funds. All the money that you track in ChurchTrac is assigned to one or more funds. Funds are like buckets containing money set aside for a specific purpose. Examples of funds include general fund, missions fund, building fund, so on. Each bucket has its own purpose for something. We can show our visual guide again. You can see that funds can span across multiple bank accounts. Each fund has its own dedicated tracked balance that is separate from your bank account balances. You can see the current balance of each fund on your accounting screen dashboard, and we're going to show that in just a second too. As you can see here though, the funds each have a separate balance separate from your bank account balances. You have 3 bank accounts in this example. We have 4 funds in this example. Matt, can you show us what this looks like in ChurchTrac on the accounting screen?
Absolutely. Here we go. So this is the accounting screen in your ChurchTrac account. If I zoom in, you'll see the accounts. These are the actual accounts that are held at the financial institution. They're displayed on the left with their current balance, with a total below that of all of that added up. And on the right is your fund summary. So these are 2 separate things. You've got your accounts and your funds. They're not the same thing. And we'll go a little bit deeper into what makes them different.
Absolutely. Now, we've talked a lot about this internally. How many funds is the right number of funds to have? And the answer is you can have as many funds as you need, but most churches that are using funds appropriately are using between 1 and 5 funds. Now, with that said, I did a little research.
Okay.
And I think this will surprise some people, maybe. I pulled some anonymous data from the ChurchTrac database regarding funds and how churches are using them. And I wanted to pose a few questions to our panel here today to see if they know the answers to what I know from the data.
I don't know why, but I'm so nervous.
Okay, you shouldn't be nervous. It's fine. So, first question for you guys. What do you think is the average number of funds used by churches across all ChurchTrac accounts? So the average number.
I'm going to say 7.
7.
I'm going to go with 12.
12. Whoa.
12. Rebecca says 12 and Lori says?
Oh my goodness. I was going to say between 5 and 7, but that's in my head what's logical.
Well, if you said between 5 and 6, you would be right.
Okay, let's go between 5 and 6 then.
The average across all ChurchTrac accounts is 5.5 funds are in use.
Okay.
That's wonderful.
So that's pretty close to what we recommend.
It is.
That's good.
And I think that surprises you, doesn't it?
Yes, it does.
It does, because you expected the number to be
Much higher.
much higher based on what you've seen. So
Yes, what I've personally witnessed.
let's ask a slight variation on that question. What do you think is the most common number of funds that churches have? So it's not the average, but which one is the most used number of funds?
I'll say I've seen a lot. I've seen 1. I've seen over 20. So I'm just going to say 10.
10. Rebecca?
I'm going to go with 8.
8.
Oh my goodness. 12. Let's go with 12.
12. And all of you would be very wrong.
Oh,
So the most common is 1.
really?
Wow.
1.
That's astounding.
Huh,
It
okay.
really is
That's
astounding.
astounding.
And the second most common is 2.
Whoa, okay.
In that order.
In that order. Yes.
Okay.
I got another question for you. Each of you now have helped hundreds, if not thousands, of churches with accounting. So what's the highest number of funds that you've each personally seen a church use?
So it was in the upper 20s, like 27, 28 is what I remember seeing.
Okay.
I'm right around that ballpark, 25 maybe.
Lori?
She's got
43.
PTSD.
43.
43.
43. So does it surprise you to find out that the church using the largest number of funds in ChurchTrac is using, this is where the drum roll comes in, 128 funds.
Wait, what?
128 funds?
128 funds.
Wow, they're the whole reason that the second highest is 2. They're dragging everybody up alone.
So I think the lesson here is if you're using more than 5 funds, and this is what we want you to hear and understand, if you're using more than 5 funds, then it's worth reviewing to see if maybe some of those should be handled as categories instead of funds.
Yeah.
And that actually brings us to our third core concept that we want to briefly talk about, and that's categories. Categories are tracking labels that you can attach to each transaction to record why money moved into or out of a bank account. Think of a category like a sticky note. Each time money comes in or goes out of your bank account, you tag that movement with a sticky note, with a label that tells you what it's there for. And to help you remember, we have a bunch of sticky notes. And so if you see us just putting sticky notes, that's just a reminder that categories are like sticky notes. They're just a label. They don't hold money. And I want you to understand that. Unlike bank accounts and funds, categories never actually hold money. They only explain where it came from or where it's going. We actually have seen so much confusion on this that Rebecca created an article that I think is linked down under this video about should you move money between categories? Another title for this could be, do categories actually hold money? And of course, the answer to both of those questions is no, you don't move money between categories. You don't actually hold money in categories. That's what funds are for. So if that's a misunderstanding you have, hopefully this early section in our live stream will help clear that up so that you understand moving forward how to do it correctly. It's normal to have many dozens of categories since they simply describe activity. So you can have more than 5 categories, Matt.
Yes.
It's okay.
You can have as many as you need.
As many as you need, but the more you have, the more complicated your life is going to be, and the more work you're going to have to do.
Yeah, Andy Lambert's laughing in the chat right now. Do categories hold money?
Use as many categories as you need based on the level of detail you want in your budgets and in your tracking. Now, categories can also have subcategories to help you group similar items together, and you'll typically use income categories for money coming in and expense categories for money that's going out. Also, your budgets are built using categories. When you create a budget, you specify how much you plan to receive or spend in each category over a period of time.
Yeah, a budget doesn't hold money.
A budget doesn't
It's
hold
just a prediction of how much you think you'll get and how much you think you're going to spend
for each category.
for each category.
So categories help you track spending and deposits, but they don't actually hold money. Can we put up our diagram again with our bank accounts, and our funds and our categories? So we can see here, we've got our 3 bank accounts, we have our 4 funds, and then inside of these funds, as money comes in or money goes out, it's labeled, and it's probably pretty small on your screen, but it's labeled with different categories. You can look at this online, click on the link that we've provided and get an up-close look at it, see it a little bit clearer. But to summarize this, bank accounts are where the money is, funds are what the money is for, and categories is why the money moved. So that's your where, what, and why, which is our 3 core principles of accounting in ChurchTrac.
Where, what, and why. All we need is a when and a who. So who is us? And when is when you do your accounting. Perfect.
Yay!
Nailed it. All right. So thank you very much. That was fantastic, Byron. I really appreciate you walking us through all of that and helping us understand this so that we have that foundation laid. Because the better your foundation, the easier and simpler your accounting is going forward. A house doesn't get more stable the higher you build it if there's a terrible foundation.
This is true.
So you got to make sure that you start on the right foot. So Byron, thank you for walking us through all of that. Now we're going to talk about a few different features that we've created in ChurchTrac accounting to make this process very smooth after you've set everything up. And also, it's worth mentioning that if you need help setting everything up, we will help you out. Reach out to the support team. We actually have a service where we will set it all up for you, or we can review the work that you've done and just put eyeballs on it, give you recommendations and tips, and just make sure that you're good to go going forward. But let's talk about a few new features that our development team, and I'm gesturing toward Byron because he's the brain behind all of this, they've worked really hard to make this really easy for you. So we've created a new transaction type for, a simpler process for account-to-account transfers. So Rebecca, you wrote the article on this, so why don't you guide us through the process?
All right, so account-to-account transfers are exactly what they sound like, right? You're transferring money from one account to another account. They're not anything new in ChurchTrac. We've had them previously, but we have simplified the account register screen to look a little bit more simple when you're doing this. So Matt, could you go ahead and go to the checking account there?
Sure.
And we'll want to select the add transaction option there below.
Yep, okay, I'll go ahead and click on that.
And so once you're in this screen here, you've got your transaction types at the top there. So you'll want to select the one, account to account transfer.
Oh, obvious. Okay.
Yes, you can't miss it. And then in the reference field there, you could just put something like TRX transfer.
Yeah, it just makes it easy.
Exactly.
Yeah, it makes it easier to search. That's why it's important to put that there.
And then in your reason for transfer, this is actually super important. You want to be pretty descriptive with this. So we want to say something to the effect of transferring $500 from my checking account, or you could just put checking to savings. And then below that, you'll want to put your transfer amount, so $500 there, to your savings account, which is already chosen. Mm-hmm. And then you'll see this little option beneath that says select a fund for this transfer.
Well, why do we need, we're just transferring from one account to another. Why do we need to select a fund?
I can answer that for you, Matt. I'm happy to do that.
It's almost like we practiced that, guys.
It's almost like that. So to really understand this, you have to understand how your balance sheet works. Mm-hmm. If you've never seen your balance sheet, you go into reports. It's one of the very first reports on the screen, your balance sheet and your income statement. We're going to talk about both of those a little bit today. But when we're looking at a balance sheet, there's two things that you need to see. First of all, your bank accounts are shown down the left side of the report. So you see your checking, savings, petty cash down the left, and your funds run across the top of the report. General fund, youth ministry, missions, whatever your funds are, whatever your bank accounts are, you're going to see those there. So when you do an account-to-account transfer, checking to savings, you are selecting a fund so that you can tell ChurchTrac which column on your balance sheet the money moves in. So if you're moving from checking to savings, you select the general fund, it's going to move from that first cell down to the one right below it. And that's why you have to select a fund when you're doing an account-to-account transfer, Matt.
Yes, perfect. All right, and I zoomed in on this just so that you can see this is an example of a balance sheet that you'll see if you generate that in your account.
Can I also just point out, because this becomes important as we talk about the next thing too, the money is moving vertically when you do an account-to-account transfer. There's a vertical movement, either up or down, on your balance sheet.
Yes, and that'll come in, knowing that will come in handy in a moment when we talk about fund-to-fund transfers. All right, so that's account-to-account transfers. Now, let's actually talk about fund-to-fund transfers. So Lori, why don't you walk us through how to do a fund-to-fund transfer? Because you and the team helped put together a whole new transaction type to facilitate.
Feature.
Yeah.
Very exciting thing that's just recently been introduced.
Just recently.
Because you could do a fund-to-fund transfer before, but well, I'll just let Lori explain it.
So in the past, you had to do some gymnastics in ChurchTrac to transfer money between funds. So our latest update includes a new interface for making fund-to-fund transfers more fun and easy.
Put the fund back in fund-to-fund
Put the
transfer.
fun back in. Okay, so we're gonna talk about this just like we did with Rebecca. We're gonna go into our checking account. We're going to go down to the bottom and create a new transaction. And now we actually have a brand new transaction type, Matt, called fund-to-fund transfer. And just like with other transactions in here, it creates a new experience. So TRX, okay, the reason for the transfer is we're going to move $500, transfer $500 from the general fund to the missions fund. Okay, put your $500 in place. Select your starting fund, which is your general fund. Select your going to fund, which is your missions fund. Okay?
Ooh, something just popped up.
Yes, something new and wonderful. Okay, so total assets stay the same, but the fund buckets get more or less on this first line, and it includes your checking account. So Byron, would you explain this?
Right, what you're seeing here is actually a glimpse from your balance sheet. It's showing you that the money is moving, this time horizontally on your balance sheet, from left to right or from right to left, from one fund to another. And I lost my place, I'm sorry, y'all. It shows that the money stays inside the checking account. You're in the checking account when you make this movement. And so it's just moving horizontally on your balance sheet. But this also impacts your income statement, which is another very important report in ChurchTrac. And if we scroll down here, we're actually seeing
This is an income statement.
an
example
income
of one.
statement.
Yeah.
A fund-to-fund transfer impacts this because it shows that the money was moved from one fund to another, but it's not really associated with a category.
Right.
And so we've created a new section on your income statement now. After your income section, after your expense section, you're going to see this new transfer section. And so this will show you for the time period that you run your income statement for, the amount of money that moved horizontally between funds, and we associate it with an internal fund transfer.
Perfect. Makes it really simple.
It does. It actually solves a big point of confusion, Matt, that our customers have had. In the past, the only way to move money between funds was to create a journal entry with categories, and that can mess up your budgets and reports and et cetera. So this is a cleaner, simpler, more streamlined method.
All right. Now that we've got those transaction types covered, the account to account and fund to fund transfers, there's a whole new feature, not just a transaction type or an improvement, but an actual new feature in the accounting screen that we're all really excited to announce. So why don't you, Lori, talk us through the untracked accounts?
Okay, so I really love this feature. An untracked account is a special kind of bank account in ChurchTrac that doesn't affect your totals. Think of it like this. You can see and update its balance, but it doesn't show up on your balance sheet and it doesn't change your church's total money. So untracked accounts are perfect for mortgages, for large loans, equipment, and or buildings if you're tracking hard assets.
Oh, hard assets, okay. So yeah, buildings like church vans, other fixed things.
Sound equipment is one that's commonly
computers.
tracked. So best of all, Matt, you can attach a category to an untracked account whenever that category is used in one of your regular accounts, like your checking. The untracked account's balance updates automatically. It's so cool.
Well, Rebecca, you wrote the article on this, so I'm going to have you walk us through step by step how to set up an untracked account and make sure it's good to go for the future.
Awesome, let's do it. So in this example, we'll just say we're setting up our mortgage account. So you'll want to go to your accounting screen, view your accounts, you'll see that add bank account option there. And then if we zoom out, well, first it'll ask us that question there. Is this a financial account that holds a balance you want to track? In which, yes, it is. For the account name, we could just do something like mortgage. And then we'll select the untracked option there. Perfect. And then in here, you'll see that little option at the top there. Just note that it is an untracked liability for mortgage.
It's an untracked liability.
And then you'll just want to put your start date and your starting balance there. So you could just do like, 100, and that sounds perfect.
Awesome.
And then create
You don't
the
want to
account.
just make up that.
You don't
like,
want to
you know,
just make
like,
it up, yes.
You need to make sure you're using like your balance sheet or just whatever
Go
your
online
statement.
to your
Yeah, I'm
bank's,
sorry,
your
statement.
mortgage statement, or whatever they've sent you in the mail most recently. Use
you
that
go.
number.
And notice here, so we've got the account added. Notice we've got the 123,000 there, and then our total balance for our accounts is the 143. So it doesn't affect
Yeah, it was
my total
143
balance
before we started,
Yeah.
and now it's still 143, even though I just added a $123,000.
It's like magic.
Yeah.
But go ahead. So the next thing you're going to want to do is go to your categories, Matt,
That's at
and
the
we're
top of
going
the
to.
screen.
Yep, we're going to create 2 categories here. We're going to create one for our mortgage principal and then one for our mortgage interest.
So it's mortgage principal, okay?
And then mortgage interest.
Okay. All right.
Perfect.
Both of those are created.
Awesome. So we've got that in place. Now go ahead and jump back over to your mortgage account. And you'll see there that little pencil icon. You'll select that. And here we want to select a category, an auto adjustment category here. And you'll just search for your mortgage principal category. Perfect. Awesome. And then when we close out of this, when we go and we enter in our transaction for a mortgage, that category will auto adjust
Well, why
in the
don't
mortgage.
we show them
Yeah.
what that looks like?
So we'll go ahead, go into your checking account, let's say, and then go to add transaction. And then we can just update that payee description there, just put mortgage payment.
Sure.
Perfect. And then in your category, that mortgage principal. And let's just say we'll do $2,000 there. And then we also want to add an additional line for interest. So we'll do our mortgage interest category. And let's say 3,100 there. And you can also enter any other lines that you might need to at that time, but we'll go ahead and save that.
Okay.
And we should
So
see.
there's that
Yeah.
transaction of $5,100 in the checking account.
Perfect.
If we go back to the dashboard and then select mortgage,
There she is.
there it is. There's the mortgage, $2,000 toward the principal. Love it.
Perfect.
So that's how you update. You don't like add a new transaction to an untracked liability account.
Correct.
You record that transaction in another account and it updates the balance on the untracked account.
So you can add a transaction to an untracked account, but it's just an adjustment. You can make an adjustment to the balance, but the easiest way to do it, especially if you're doing something like a mortgage, is to just pay it out of your checking with that auto adjustment category selected with your principal, and it will automatically reduce your mortgage balance every time you make that mortgage payment.
So, but what is the benefit of doing an untracked account over just a regular liability account? Because it doesn't appear, like what are some of the benefits of doing this? It doesn't appear on the balance sheet, right?
Mm-hmm. No.
Yeah, it doesn't appear on the balance sheet. It doesn't affect your totals. Because before it would, if you put in a negative, like $123,000 liability, you look like you were $100,000 in the hole financially, when really you weren't. You just had a debt that you were paying off month to month.
Right.
Right, so it takes it off your balance sheet, it takes it out of your bottom line so that you don't have to see that every time you're looking at your numbers. And so it just takes it off the books to where you can still track it, but it's not in your balances.
Nice.
It's also in your budget.
Right, it also does not impact your budget.
Unless you somehow are tracking for the mortgage principal in the budget.
So
But it's not going to show up on the budget otherwise.
Your mortgage principal is still a budgeted category, and that will still be reflected because you're paying that out of your checking account with that category in your fund. And so that's going to show up on your budget. But your adjustments to your untracked account are not going to be on your budget.
Perfect. All right, so that's everything. That's how to set up everything for success. That's how to use the account-to-account transfer, the fund-to-fund transfer, and an untracked account. we've been stoked about this for a while. We've been so excited to show this all to you and launch it to the world. And here it is.
And here it is.
So when you all signed up to join this live stream, there was a little questionnaire, and some of you submitted questions that we're going to answer now. There's also some questions I've seen roll in the live chat. I'll try to pull some of these in as well, but we're going to tackle the most important questions that we identified when you all signed up. So why don't we jump in?
Okay.
The first question that we received was, how do I convert? And this is important because I know a lot of churches probably have an existing liability account for their mortgage. How do I convert an existing mortgage liability bank account to an untracked account?
Well, Matt, I'll take that question. So the very first thing you're going to do is look at your current mortgage account that you have and make sure you note the balance, okay? Then you're going to actually create a journal entry to zero out that mortgage, okay? Then you're going to go through the exact steps that Rebecca just did for the untracked account and create an untracked mortgage account using the balance that you have in your other mortgage, and then set up that auto assign category, and then going forward, everything will track correctly.
Perfect. All right, next question is, what happens to transactions entered before the new changes, specifically the account and fund transfers? What adjustments can I make to previous transactions without unreconciling?
So this is a two-parter, Matt, and it's a good question, though. So really and truly, account-to-account transfers haven't really changed. We just changed the interface of how things look, so it's simpler now. But going forward, that you're going to use the new fund-to-fund transfer transaction, and that's the preferred way to move money between funds. The old method sometimes encouraged people to use categories to reassign money between funds, but because fund-to-fund adjustments are internal movement and they don't affect income or expenses, those category-based workarounds aren't necessary any longer. New methods keep your fund-to-fund transfers separate from your categories, and it creates cleaner budgets and reports. As far as the second part of that question, what adjustments can I make to previous transactions without unreconciling? If you choose and want to, you can actually go in and just update your categories to the same category, but there's really no need to do that. It's in the past. Let's move forward doing it the new way.
And that's one of the reasons why it's really good that this is released at the end of the year, so that it's not going to impact you moving forward. You can start January with the new fund-to-fund method, and all of your reports for the following year will be
Prettier
and accurate. Right.
So next question to all of you, whoever has the answer, do transfers affect my budget?
No.
I'm asking all of you.
No, there is no category assignment in a transfer now. With the fund-to-fund transfers or account-to-account, and because money doesn't move in and out of your bank accounts, it only moves internally. There's no label applied or sticky notes. Remember, so the budget's only going to show how money is labeled for categories, and since there are no categories involved, there's no impact to your budget either.
Awesome. Very nice. The next question was, can I upload attachments to previous bank transfers? For example, like a credit card statement to payments made to the credit card account that I entered as bank transfers.
I forgot to show this when we were going through the account-to-account transfers. Let me do this. So if you go to your checking or credit card, do the credit card. You were using that as an example. You can go ahead and go to Add Transaction down there at the bottom. And you'll see this actually wasn't there before. So this is a smaller new enhancement that you can just drag and drop. Right there.
Yeah, so even in a fund-to-fund transfer, you can have a file attached. You can even do this retroactively. You can go to a past transaction and upload or add that document or attachment there.
Very nice.
Awesome. Next question was, how do I create a normal or transfer transaction entry in my new untracked account? It only lets me create a balance adjustment.
I'm going to jump in on that one.
Okay.
So yes, that is actually correct, Matt. If you go into your untracked account, the only type of transaction that you can add is a balance adjustment. This balance adjustment can be a positive or a negative if you're doing this with hard assets and you're creating depreciation or appreciation. And otherwise, that category that you assign to the account will be used to update transactions from your other accounts.
Yeah. So you really only can update that by like recording a payment or something in another account. You can adjust the balance, like you said, if there's appreciation or depreciation,
and the like.
But otherwise, you're really just doing it through other accounts.
Correct.
Okay, perfect. Is it best to make most of my categories funds so I can have ending balances on them all? Lori, this is something you're really passionate about, so we're going to let you take that one.
Please don't. Yeah, so this is a definite no.
Big no. She wants to be screaming no.
I've been told to keep it together. So, so most categories should not be funds. Okay, so when you're creating this 1-to-1 ratio, it's not only confusing, but it's going to create more issues down the line. So don't do it. Funds are only for money that need its own balance and purpose, like designations for missions or, you're putting in an elevator at church or something. Categories are just labels that describe activity. They don't hold money. Mm-hmm. I know, label me. If you turn categories into funds, things get messy fast, and it's just too much work. Only create a fund when you truly need a separate balance for it or its own bucket. Like, keep in mind that our reports are beautiful reports, and they're going to give you the information that you need. So utilize the reports, and don't, as I always tell our customers, don't work for the system, let the system work for you.
Yes, yes. But let's say, should churches have a fund for like not for every category, but for everything that they're spending money on?
No. You don't need an electric bill fund.
Right.
That comes out of your general fund as general money coming in and general money going out. Designated contributions probably need a fund for it. That's because you're going to keep that money set aside and you don't utilize it for anything else.
So it's safe to say that if you're using 128 funds, you're probably doing it wrong?
You are giving yourself a very large headache.
Really big headache. All right, here's another question. When should I use a category and when should I use a fund? We've kind of touched on this some, but let's give a really definite answer.
Well, I think that rule of thumb of if you have more than 5 funds, you need to take a step back, reevaluate. Is this really something that needs to hold money? Or is it going to be better served just by labeling it? Because I can still see categories on my reports. I can see how much passed through with that label of a specific category in a time period. And so it doesn't have to always be in a separate fund. Most of the time, remember the most popular number of funds is 1, and that's the general fund. Mm-hmm. And so I think it's safe to say that 98% of what you do as a church is probably involving your general fund.
Mm-hmm. Yes.
So it's rare for churches to correctly, heavily utilize lots of funds.
Yeah.
It also takes all the fun out of it. Because accounting can be very much fun.
But I actually asked in the chat earlier how many funds the people watching have at their church, and most are actually pretty close to 5. There's like 4, 5, 6, some a little over that. So you all are smart and doing things the right way. I love it. So how do I change a fund's balance, though?
By using a transaction.
Just by using a transaction,
Yeah.
That's right. We made this so that, I'll show this on the screen actually, just to illustrate this. If I go to the funds page in the accounting screen, and I select one of the funds here, the youth fund has $16,500 in it currently, and you can't see what I'm doing, but I am typing and nothing's happening to that balance. I can't affect it here.
Nor should you.
Nor should you.
Affect it there.
No, you don't update it manually. You just go to the accounts page and then go into one of your accounts and update a transaction. Because, and we're not going to get too deep into this, but your categories have a default fund set so that when you categorize a transaction, our system automatically updates the balance of the fund for you through that connection with the category. So that's how it's simple.
Keep it simple.
Keep it simple. Okay, so let's move on to the next question. This is really important. Is it okay to have temporary funds?
Yes.
Really?
Yes.
So what would be an example or a use case?
So we actually had a church in Hawaii for the, I think I'm pronouncing it correctly, the Lahaina fires that occurred. And this particular church was the designated church to take in all the contributions to help out with that area. So they created a Lahaina fire fund, and all the contributions that came in went into that fund and were distributed from that fund. So hopefully they'll never have need for it again. And when it's empty, they just retire it.
Okay, thank you very much, Lori. Next question was, when should I use an untracked account instead of a normal asset or liability bank account? This is a good question. There's been a few questions in the chat related to this. Okay. Like, would a CD be an untracked asset? That was a question in the chat.
So for purposes of the untracked account, this is not a live credit card. Live credit card, I call them live because they're constantly changing. Yeah, it's a very active status. You want to track the expenditures by using your labels, okay? And that way it affects your budget because it updates your budget with these expenditures. And then as you pay the payment, you can do an account-to-account transfer and eliminate the balance as you need to. A CD is also a live account. You are adding interest to that CD. You are eventually cashing it out and making it active. But they're live. Untracked accounts would be something that you don't want to affect your reports.
Yeah. So like any money market account, especially something like a pastor's retirement, the church is actively paying into it. So it's also
being
gaining
tracked.
interest. Yeah. So it's not an untracked.
You could use that though.
I would make an argument against what Lori said for a CD. I could see where if you didn't want it on your balance sheet, let's say you have $100,000 in a CD, you can still do balance adjustments to apply the interest to that account and track it that way instead of having it on your balance sheet. But it kind of just depends on your church and what your needs are and what you actually want to show.
Yeah, I guess so. Then, yeah, there's a litmus test. What do you want to see on the reports?
That's it.
What do you want? How do you want to
truly
affect your reports?
Yeah.
Yep.
Now, if you take it off and people start asking, where did the $100,000 go? That might be a whole different set of issues.
Another question, and this is something that I actually saw earlier today in a Zoom call I did with a church this morning. They had a savings fund. So a question we got is, do you need a savings fund? And we could even expand this because we see funds for every single account at the bank. We see funds for every single program and ministry at the church. Where do you draw the line and say we don't need that fund?
You draw the line a lot sooner than what you think.
Yeah. You probably need less than you think you need.
You do. Right. If you have a fund for every bank account you have, that's
confusing.
You're making your life more difficult.
It's both redundant and confusing because those are two different things, but you're treating them as the same. And so you're not going to be able to make sense of your own reporting.
Right. So this might be a good time to show I don't think we did this, our updated chart. Did we show our updated chart with?
Oh, no, we didn't. Yeah, so we have that updated chart where we illustrated funds and accounts, but also the new
untracked type.
Untracked account. So there we go.
When you look at this, you can see that you have multiple bank accounts here, and now this updated chart is showing the untracked account as well, but your general fund exists across all three bank accounts. You don't need a separate checking fund and a separate savings fund and a separate credit card fund. You just use the general fund or you use the missions fund and you can spread it across multiple bank accounts. That's the beauty of that. If you start thinking of funds like accounts and thinking they have to mirror each other, then you're doing extra work that's not necessary. Funds should only be for a purpose. And a money market account is not a purpose, that's an account.
Yep.
And so don't confuse those three core concepts that we were talking about at the beginning.
Yeah. Amanda Colvin asked in the chat, Amanda Colvin 7204 asked, what is the best way to retire a fund or an account? So sometimes a bank account is closed or we realize, oh, you know what? Like here's an example that relates to what we just answered. And that is we see churches joining our platform all the time that have been using the bank to do their fund accounting. In other words, they have a checking account for every ministry, a checking account for the men's ministry, for the missions ministry, for the women's ministry. So they've been doing fund accounting, but through the bank,
That's
not
really
through.
complicated.
Yes. So if a church like that joins ChurchTrac, what's the best way forward to how do you close those accounts, or how would you close a fund if they're a church that has 128 funds?
I think it depends on how complicated your previous setup was. Sometimes it's better just to reach out to our support team and say, I need to start over.
Yeah.
Let's start again from scratch. But you can mark funds and accounts as inactive. You can zero them out through journal entries that you make on your register. So you can do a lot to try to clean up your accounts and funds and get them correct without having to start from scratch. But sometimes when people reach out to our support team, Lori helps them and she says, listen, I love you, but the best thing to do is start over.
Michelle Devine in the chat, she earlier was mentioning or saying that she feels like this software actually isn't very easy to use. And then later in the chat said that her argument is that their council and pastor wants to know how much is in a camp fund or a community meal. If a category doesn't have money in it, how is it tracked? So let's go back to the example of categories don't hold money. They don't hold money, Michelle, but you can still use your categories and generate reports to know exactly how much money was brought in through a category. So you can still see and use your categories to know how much money has been raised and is possibly available to be used for a specific purpose. It's just not given its own separate fund. However, if that ministry or that program is like a camp, I mean, that's huge. That's a complex thing.
That needs a fund.
So that would need a fund. Yeah. So
and that's okay.
There's your answer, Michelle.
Yeah. You can have a camp category. You see it every year, Matt. When churches start taking their donations for camp and that kind of thing, this money is designated for a purpose, which fits the very definition of the fund. So you create the category, associate it with that fund, and when the money comes in, it sits in that bucket. When you need a report for that, you simply go and you run one of our fund reports, and it gives you the granularity that you need to track money for that's in the camp fund and even specific to categories.
So it's also important to note that being a category is a label as money moves. Over a period of time, you can run a report to see how much money has moved through a category that has that label on it. And so you run a category report, or you go to one of the most underutilized features of the accounting screen and you click search up on your toolbar. And you can create your own custom accounting report based on the criteria that you enter. You can see what transactions, what's the amount of money that's been labeled with a certain category for a specific date range that you specify. And so if it's for all of 2025 and you want to see this category and you run that report, it's going to show you everything that's passed by that label through that category.
Perfect. Yep.
And I will tell you, I agree with Byron. This is the most underutilized tool, but it is one of my favorite features in our entire software because I love the granularity of this report.
So Michelle, if you still have questions, reach out to the support team. We would love to make sure that you're taken care of and that your accounting is set up so that you, your pastor, your council can log in and get the data that you need very easily. Yeah, see, Andy Lambert said, I love search on the toolbar and use it every day. So Andy's a big fan. Now, Paulette asked earlier, she said, it wasn't Paulette, it was Deborah. Yeah, so Deborah asked, when I started with ChurchTrac this year, I was told that we needed to close our various accounts at the bank and only have one account. Was that correct? Yes, Deborah. We highly, highly recommend that you consolidate your bank accounts to a checking account and a savings, that's fine too, but do all of your checking through just one checking account. And then use your funds to divide that money up into its different buckets and purposes. Do you have to say something?
So I think it's on a case-by-case basis too. You may You may have a need for another checking account, but you don't have to with ChurchTrac. If you were using some other platform that was not a fund-based system, you would really have very little choice. You'd have to have a different bank account to be able to track different fund balances. But because ChurchTrac is a fund-based system, it can do that for you with only one account. You can use ChurchTrac with multiple funds and only have one bank account.
Okay. All right. I'll go ahead and cut this off now because we still have several questions rolling in. If you have a question that wasn't answered in this live stream, reach out to the support team. You can go to churchtrac.com/support and send us a ticket, or from within your ChurchTrac account, just click that orange help button so that you can reach us anytime. We would love to make sure that you're taken care of, your questions are answered, and that you're good to go by the end of your conversation with us. Also, don't forget to subscribe to our YouTube channel. You're watching this on YouTube right now. I know you are. So make sure you subscribe to the channel while you're here. Like the video as well. That way you can stay up to date on everything that we put in there and stay up to date on everything that we're doing. But also, we have a Facebook group that we would love for you to join, full of other ministry leaders that would love to answer your questions. Andy Lambert was in the chat today. He's also in the Facebook group, and he's extremely helpful. We love you, Andy. So be sure to join that community so that you can get your questions answered about ChurchTrac or about anything. We see people asking questions that have nothing to do with ChurchTrac, and we love it. And again, our support team is here for you anytime you need us. We also have user guide articles that will probably answer your questions and videos there to learn more about how to set up and use your account. But we'll go ahead and end it here. I really hope that all of you...
You were going to ask us all one more
question.
I
was. Was I really?
You were.
Was. Oh, I totally forgot, guys. I'm so sorry. Yes, you wanted us to have just a takeaway.
Yeah.
So don't leave yet. If you had one thing you want people to remember the most from this live stream, what is it?
I think it's a combination of it's important to have a good foundation, understanding those three core concepts we talked about at the beginning, and that categories can't hold money. Categories cannot hold money. They're just labels, sticky notes.
They're just labels.
Lori?
So I think my favorite thing and my favorite takeaway today is the Untracked accounts, because this is such a cool new toy tool feature that allows us so much more benefit of and accuracy in our reporting. And as you all know, I nerd out on details. So that's my whole thing right there.
Rebecca?
I've got a good one, or at least it's a good rule of thumb.
Yes.
If you cannot count your funds on both hands, you should reconsider how many funds you have.
Yeah. You really need no more than 5 for most churches.
You should have fun.
You should have fun.
But not too much fun.
Not too much fun.
Exactly.
That's always my rule of thumb, is to have fun. And if you're not having fun, something needs to change. But the one thing that I want all of you to remember is that our support team is here for you.
Yes.
Always. We're here to help you. Don't be afraid. Don't act like you're imposing. That's what we're here for. So send us a support ticket, schedule a phone call, read our articles, watch our videos, and we would love to make sure that you are taken care of so that we can partner with you in ministry. But I hope that you learned something today. I hope that God blesses your church and that more people walk into the doors of your church so that they can hear the good news preached and join your body of Christ. See you later.